innovative and employment also. They stimulate competition for price, product design and efficiency. If there are no SMEs, big enterprises become monopoly. SMEs also help big enterprises such as supplying raw materials and parts and distributing products made by them. Standard accounting and reporting is any business entity's underlying foundation and controlling function. MSMEs are no exception. First, there must be a standard and uniform accounting method to know whether or not a business entity falls under the definition of MSME. If it falls under which subcategory, the institute's accounting guidelines and standards help the industry to bring uniformity in accounting and financial reporting, to compare the elements of various expenses or cost and the operating efficiencies of the production lines. Various stakeholders are the users of the data compiled and reported by MSMEs are like government, bankers, tax authorities, educational institutions, business analysts, prospective investors, lending and financial institutions, emerging entrepreneurs, consultants and various industries, etc. are used in these financial statements. However, without uniformity and compliance with accounting and reporting standards, the data available to these users is brittle. It is observed that the standards of accounting and financial reporting differ much from the laid down standards of the institute. Our technical speakers here, Gurajacharya sir, will enlighten us about various non-compliance issues observed in the financial reporting, like non-disclosure of accounting policies and accounting standards. His rich experience and expertise in our profession definitely will give insight with respect to the non-compliance of the financial statements. With this brief opening remarks, I present the session speaker Gurajacharya to this august audience. Thank you very much. Thank you.
Thank you, sir, for giving us insights into the topic today. So I now request our session speaker, CA Gurajacharya sir, to start the session.
In Malayalam, I can only say Namaskara, Namaskaram, and Swamiye Sharanayappa. And in Telugu, since Balkan Kumar is here, I can say Indaro Mahanubhavulu, Andariku na Vandana. I am the son of soil, Ballari, undivided that was. Now, of course, it has become a Vijayanagara district. And I should say, hats off to Mandaraj sir for doing such a Vaibhavada Mantapa. I mean, Vijayanagara is called as the lost glory, unfortunately. And I would say, Mandaraj sir, you have brought, and the team, of course, I know the entire team which has worked for this particular event, including my own good friend, Mr. Niranjan Prabhu, and so many other SIRC council members, central council members, and Aki Baswaraj, I know. They were staying here for the last 1 week and setting up this particular stage for the benefit of all of us. So thank you, sir. And Bandaraj, apart from being the SIRC chairman, has also been my guru, who has taught me the basic, the intermediate accounts. So for that also I am grateful. I have today his own brother who has taught me accounts, Jayanta sir. So please stand up. In fact, he is the elder brother of Mandaraj, who taught me accounts in BCom first year and second year. And they did not teach. What they did was, they ignited our minds. To learn on your own. I think that, sir, has made all the difference to us. Today, let me tell you, in this particular conference, it is not possible in the next 1 hour, definitely so that there is a 5 minutes of bonus times or whatever it is. In the next 1 hour, I can't upload and you can't download all that is required in the subject. All that I can tell you is, I will make you think. I will make you think. And where is Kota? I don't see him. Kota Srinivas is, I think, dialogue. Think differently, act perfectly. It's a very apt statement. I would like to say, you have to think, of course differently, but apply the thinking, and that becomes applying thought. Does that spell something? Applying thought? That's the tagline of Wipro. I really like that. Applying thought. Think innovatively, differently, and apply what you have thought into your practice. I think that is the essence that in the morning Ullas Kamath and MP Jayakumar set the tone for the day. Let me tell you, all of you are from different places. Bellary is, and of course Hospet is a great city. My wife is here. I should tell that we people are considered to be people of stone. Stone-hearted, I don't know, but made out of stone. Bellary is very famous for iron ore, but we are like stone. Another sir, let me tell you, maybe I tell my wife also, that although we are made of stone, we are capable of being chiseled like the one and only stone chariot which is there in Hampi. So like that, we are capable. And I tell you that the Tungabhadra water, I had the Tungabhadra water for 24 years. When I did my CA from Bellary, that has really given us a lot of energy. Yesterday you could see the energy when people were dancing here on the floor. Maybe the Tungabhadra water made all of us dance to the tunes of up to 11 o'clock we were dancing, and people were criticizing that they stopped the orchestra program sooner than later. So with this as a background, let me go into the non-compliances observed in the financial report. I don't see Aki Baswaraj if he is there, let me know where he is. But very interestingly, sir, Aki Vedanthara, Kannadadalli, English, let us say, what is the difference? I would say financial reports look very basics. Looks very basic. When we are talking about GST, income tax, bigger issues are there. What are we talking about financial reports? I would say financial report is like the akki. It's like the rice or like the annam. If that particular rice or his rice is not good, the end result, whether it is palav or puliyogare or masrana, it will not come out nice. So if your financial statements are good, not good, I have my bankers from Karnataka Bank and Canara Bank, so many bankers have sponsored, they look into the financial statements and they get an altogether different opinion about that particular company. If the financial reports are not good, then maybe the income tax, the GST decisions will all go for a toss. So that is the importance of financial reports and of micro, small and medium enterprises. I said I'll maybe make you think, why did I keep medium in a different color? Why did I keep medium in a different color? For all of you to know that micro, small and medium, close the word medium. In fact, I should have struck off the word medium from there. The reason being, the entire benefit that is available is only to micro and small enterprises. Nothing goes to the medium. So which means up to 50 crores turnover and up to 20% of that, which is 10 crores of investment in plant and machinery, is considered as micro and small. That is why in the banking sector, we say a bank branch is called as a SME branch. The SME branch, that is small and micro, we don't extend any of the benefits. If you know that we have to make all our payments to the micro and small enterprises within how many days? Within not 45 days, within the agreed period, which shall not be more than 45 days. If your agreed period is 20 days, you have to pay it within 20 days, which shall not be more than the agreed period, not more than 45 days. Very important from the point of view of section 43B of the Income Tax Act, if you don't pay within that particular period, at least by the end of the financial year, it will be disallowed for income tax purpose. It will make you think, is it a good provision for SMEs? Yes or no? It's a good provision for SMEs? Yes? I say no. I say no. What is the reason? What is the reason? The reason could be, because this could be disallowed for the SMEs only. Maybe the larger entities will probably pay off on time, but the SMEs only, they would probably have diverted their funds or they would not have received. I have my own definition of who is a micro and small enterprise. Micro and small enterprise is like a football in the game of business. Hit from both sides, the seller as well as the buyer. The seller of goods to you will expect the micro small enterprise to make the payment to him in advance, and the buyer will expect a 90 days credit period. So which means both sides my funds are blocked. So please warn all your clients to have a proper working capital arrangement, otherwise they will be ending up paying a huge amount of taxation, income tax under 43B, not on their profit but probably on their turnover itself. I mean, you can work out on a case study and get into the details of that. All that I wanted to tell you is the benefits under the MSME Act, MSMEDA Act is available only to micro and small enterprises, nothing to the medium enterprise. Having said that, there are a lot of, I said, although Pandaraj wanted to talk on financial statements for micro and small enterprises, I said buy one, get one free. I also added Companies Act non-compliances observed by small and medium companies and small companies. Now look at this. Within the Companies Act, we have two terminologies, small and medium companies and small companies. What is small and medium company? Small and medium companies are for the purpose of complying with the accounting standards. They are given the benefit of certain relaxations with respect to disclosures and presentations. We will see that a bit later. But when it comes to compliances within the Companies Act, such as you don't have to have 4 board meetings in a year. For a small company, you don't have to have 4 board meetings, you can have 2 board meetings. So in short, what I was trying to say is, small companies are given relaxation with respect to certain provisions of the Companies Act. What are they? Maybe rotation of auditors is not applicable to a small company. They don't have, the auditors of the small company need not prepare a CARO, need not prepare an IFC report. So like that, there are certain compliances within the Companies Act. The certification of their annual return need not be done by a company secretary, or the board report can be on an abridged basis. So these are the benefits available to small companies. So who is a small company? I call them as 440. Now it is 440, which means paid up capital of less than 4 crores and a turnover of less than 40 crores. So that is the definition of small company. Definition of small and medium companies is important from the point of view of getting relaxations with respect to the accounting standards. And what is the definition of an SMC? It is again linked up to 250 crores. There it is 250 crores and 20% of that 50 crores, 250 crores of turnover, and 20% of that, which is 50 crores of not investment in plant and machinery but borrowings. And they have different parameters for different, so you will have to have a compliance chart differently for different purposes. So going forward, I think Shipriya was talking about NAFRA. I just have put up a slide to say what are all the non-compliances which has been caught by the NAFRA, which could be applicable to small companies also. She mentioned that rightly. Information, how does the NAFRA get the information? Based on financial reporting review boards. Non-compliances will be referred from the institute to the ROC, and ROC, MCA, will in turn refer it to the Financial Reporting Authority, National Financial Reporting Authority. And what is the order that they have passed on a chartered accountant from Hyderabad? They said that 5 lakhs penalty on the chartered accountant. He was a proprietor, and that chartered accountant has been debarred from practice for 10 years under the Companies Act, both the statutory auditor and the internal auditor. So that could be the impact. So what was the mistake that he did? Emphasis of matter paragraph has been misused to cover misstatements. Now, all of us know what is an emphasis of matter. We have SA 700 unmodified opinion and SA 705 modified opinion. Modified opinion could be either a qualification or a disclaimer on an adverse report. But when it comes to SA 706, we have emphasis of matter. What is an emphasis of matter? A matter which has been properly dealt with in the financial statements. The auditor feels that it is of such fundamental use that he wants to draw the attention of the reader, then he has to use the emphasis of matter as per SA 706. Now what this auditor did was, he has used the qualification as a route to be used through the emphasis of matter, which is absolutely wrong. Absolutely wrong. Auditor did not submit the audit file, audit working papers, which has been called for, violating accounting standard 22. What he did was, please understand, deferred tax liability is a duty of the company to show. When it comes to deferred tax asset, it is, please understand, you cannot create an artificial asset in your balance sheet and increase your net worth. If you have to create a deferred tax asset, you shall have a convincing evidence which has to be disclosed in the financial statement as to what it is. Just preparation of a CMA data or a project report cannot be a convincing evidence. So when you create an asset, you have to be doubly careful, and the auditor also should be convinced. In this case, that a deferred tax asset was created without having a convincing evidence. And failure to report errors or errors in the cash flow statement. How many of us give the amount of importance that we give for balance sheet and profit and loss account to the cash flow statement? Think. Maybe balance sheet and profit and loss account, every auditor goes line by line. But when it comes to cash flow statement, it is a derivative. And we ask one of the juniors, we just ask whether it's done properly, and then we sign off that. And there could be errors there. And you will see in the later slides that the Financial Reporting Review Board's major non-compliances within the 29 accounting standards has been in accounting standard 3. So please give equal amount of importance to accounting standard 3 cash flow statement. The other non-compliances which was observed by NAFRA was on a partnership firm from Jharkhand. 25 lakhs penalty on the firm, please understand. So that's why I always say, choose your partner carefully. Because if the partner does a mistake, the impact will be on the firm also. So 25 lakhs penalty on the firm, and the engagement partner was again charged a penalty of 5 lakhs and debarred from practice. Now what was his mistake? Not reporting in CARO the contingent liability or provision arising out of an income tax order or an income tax demand. Going concern not properly dealt with, very serious. There could be apparent reasons why the going concern is impacted. One of the reasons could be negative net worth. So if that is there, we have to have a convincing evidence as to how the going concern is to be dealt with. There are various standards telling about that. Then not recognizing interest on borrowing costs. Marked, the company has borrowed from the bank, and the bank has marked the account as an NPA, and the company has not provided for interest. What is the reason? The bank has not charged interest. Please understand, the bank's not charging interest is following accounting standard 9, saying that when you are not sure of getting the interest, you should not credit the income to the income and expenditure to your profit and loss account. But the company is under an obligation to provide for interest as long as there is an obligation to pay. So not providing interest on an NPA account is also a cause of penalty in this particular case. Not evaluating impairment of property, plant and equipment. The private limited companies, penalty on auditors under the Companies Act by the ROC partner. Private limited companies, please understand, The earlier two cases was from Nafra. This is on a small company. On a small company. On a small company, shareholders are not disclosed. More than 5%, there is a need for disclosure in Schedule 3, which was not disclosed. Breakup of share capital not disclosed. Advance from relatives, accounting standard 18 not followed. Advances to suppliers not classified as secured and unsecured. So for all these mundane things, what we consider as mundane things, there will be a penalty which is charged on the small company. Let me tell you the good news and the bad news. The good news is, for a small company, the penalties that could be levied by an ROC, Niranjan, is 50% of the applicable penalty, subject to a maximum of 2 lakhs. Good news, right? Now what is the bad news? What is the bad news? Maybe Yashashwini, I want you to tell me, Yashashwini, Umaji, excuse me, I just want you to tell me what small and medium companies we saw, small companies we saw. Okay? Now let me understand from you, what is the definition of a small and medium chartered accountant? What is the definition of a small chartered accountant? That means if there is a relaxation like that, please understand, maybe the penalty will be restricted to 2 lakhs. What I was trying to say, Ravindranath and Babu, is there is no small chartered accountant and big chartered accountant. At most what we have is a associate chartered accountant and a fellow chartered accountant. Yeah, I think maybe should you take up this matter so that the penalties will be applicable to the small chartered accountant to the extent of 50% and no. Even in this particular situation, the penalty that has been levied to a chartered accountant will be full. There is no relaxation. And that is what Shripriya was talking about. Even if you have one company audit or 100 companies audit, you will have to read the entire Companies Act, the Code of Ethics and Accounting Standards. This is another interesting development which has come through audit trail. Audit trail. Let us understand what it is. What we know audit trail means if you are maintaining accounts electronically, you should have a facility in your software to have a trail of all the corrections that you did. All the edits that you did, there should be an edit log. Okay? So what are the precautions? This is mandatory from 1/4/2023 for all companies. So what are the precautions that one has to take? All companies must have this. If they don't have it, that has to be commented by the auditor. The next thing is, if the software being used already has this facility, you have to upgrade that facility. Until you upgrade it or update it, it will not happen automatically. Then restrict administrative rights. What is meant by this is, in case you already have this, but one of the juniors has deleted that particular facility, then the entire thing will be taken for a toss. So these are the things that you have to know. I have given certain things in a different color. Any change to be done only through rectification entries to the extent possible. And need for internal and periodic compliances. If somebody comes at the year end talks about some changes to be done, it will be very difficult. So therefore, interim audit is you should sell your internal audit as a requirement on this particular matter. Now what could be the gimmicks that could be caught? What are the gimmicks that could be caught? Negative cash balances subsequently rectified will be visible. Cash transaction entered after the year end to adjust the profits. Number 3, backdated entries after year end adjustments. Number 4, cancellation of vouchers at year end to reduce the income or reduce the expenses. Splitting transactions subsequently to fall in line with 48(3) or 269 SS or 269D. Antedating the sales invoice to defer the GST payments. So because once it is already entered, that has already left a mark. And now, please understand, in the faceless assessment, they can just ask you to send us the edit trail of whatever changes have happened. If they ask just that, they can come to know all these gimmicks which have happened in the company. So please forewarn that nothing like this can happen. It can be easily what we call exception report. The banks can, the income tax department or the GST department can ask for an exception report and get you caught very immediately. Also to private limited companies. certain provisions we think that they are not applicable to a private limited companies. So this is a slide which encapsulates the applicability of certain provisions, especially CSR, applicable even for a private limited company. Internal audit provisions, rotation of auditors. Rotation of auditors is also applicable for a private limited companies if you cross the threshold. Only exception I have not put there is for a small company. For a small company, this is not applicable. What is a small company? 440. So you remember that? 440. Full-time appointment of a full-time company secretary. Applicability of CARO, of course, is applicable to private limited companies, all of us know, except for small companies. Then other things are all there. So even cost audit will be applicable for a small company if you cross the threshold. One of the interesting things that now is being asked, is technical guide. Please tell us, how should we prepare the financial statements? Should we prepare the financial statements in the format? The format all of us know, which the institute has given by way of a technical guide, is very similar to the one which is applicable under Schedule 3 of the Companies Act. Should we follow that? All these days it was a technical guide. The institute has recently come out with a guidance note. So technical guide is sort of a prescriptive in nature, may or may not follow. Maybe most of us did not follow, or some of us have had. But when it comes to guidance note, it has a higher level of the mandate from the institute. I think Kota can talk about it. If you don't follow the guidance note, you must have a reason as to why you are deviating. So instead of giving the reason, you better follow the guidance note. That's what we always say. Standard, of course, has to be complied with, otherwise it will be severely punished. The point I am trying to say is the format of the financial statements, even for a non-corporate entity, be it a sole proprietorship concern, or an LLP, or a cooperative society, or any other form, must be in the format that has been prescribed. So what are the important changes? One of the important changes which we normally don't do in a non-corporate is to give a comparative of the previous year. So we don't normally give comparative because tally is there, but tally also has the comparative. You can probably give the comparative of the previous year, which we never used to give, but it has to be given. Owners' funds, owners' capital account, broken into capital and current account, long-term advances, secured, unsecured, and current short-term borrowings, secured, unsecured, trade payables, dues to MSCs, small and medium enterprises, has to be shown even in the case of a non-corporate entity. So, and trade receivables outstanding for more than 6 months. Fortunately, we don't have to give the breakup of up to 6 months, 6 to 1, 1 to 2, like what we do for companies. Erstwhile requirement of outstanding up to 6 months from the due date was payable and beyond. So that also has to be given. Brief about the entity. This is the format which has been given. So from when should we follow this? Until 31/3/2024. From 1/4/2024 it is made mandatory. It's coming as a mandate from the guidance note. So you have been given this year exception, next year is also an exception. After that you will have to comply with the requirement of the particular guidance note. Let's talk about format. This is the question that I always ask. What is this? What is it which I put up on the slide? P&L account. Am I right? P&L account, all of you say it is a P&L account. P&L account, right? Anybody saying otherwise? No. I am saying otherwise. This is not a P&L account. It is a statement of P&L. So there is a difference between, Jana sir, you taught me accounts. There is a difference between P&L account and the statement of P&L. I'm not supposed to tell this, but let me tell for the betterment. I used to correct CA papers. I don't know I should either say, but the point I'm saying is the mandate which comes when we are correcting the papers, we say that prepare a reconciliation account showing the difference between cost, profit and accounting profit. What does the question ask? Prepare a reconciliation account. And we know how it is prepared. It's a very simple thing. Actually, we are very assured of the marks for that when we prepare a reconciliation between the costing profit and the accounting profit. But the question was prepare a account. Most of the students had prepared in the form of a statement. In the form of a statement. And the mandate which was given to the examiner is, if the answer is right, but it is in the form of a statement, give them only 50% marks. Although it was for 8 marks, give them only 4 marks. If they prepare it in the form of an account, you give them full marks. While this is true for examination, let me tell you, I got 74% in ICW and got the first try. Not to market myself, but the point I am trying to say is, that means, please understand, I could make a mistake of 26%. What I am trying to say is, I could make a mistake of 26% and still get the first rank from it as a student. But when you come to practice, you cannot afford to make a 1% mistake. A mistake like this, statement of profit and loss account, if this is a statement, if I write on the heading as P&L account, then it is considered as a mistake by the FRR. That's the point I was trying to say. So this is the statement of P&L. This is where I wanted Jayana sir's very beautiful input. Look at this. Let us talk about the P&L account, the debit side and the credit side. And in the statement, it is the top and bottom. You know, P&L account, when we talk about capital expenditure, revenue expenditure, I will give a simple example. Let us say I bought a car for 1 crore and I have to pay insurance at the time of purchase. First year insurance will be about 2.5 lakhs. So 1 crore, 2.5 lakhs. Do I capitalize this 2.5 lakhs or should I write it off 2.5 lakhs? Can you check that critical? We should write it off, right? One of the CFOs, he went on to argue with me that 2.5 lakhs, what we pay for the first time, should be capitalized. Because there are confusion, you know, and that's the type of answer that he was trying to tell me. Then I told him only one thing. Capital and revenue, there is no confusion. It is very simple. My sir has taught me very beautifully the simple logic. P&L account, debit side, is the burial ground of the company. What gets buried? Jayana sir, this is your topic. What gets buried, sir, in the P&L? What gets buried in the burial ground? Any item which is dead. Now all that you have to say is, look at the heading at the top, 31/3/2023. On that day, if the benefit of that particular expenditure has got expired, you put it in the burial ground. Now the question that I have to ask him is, this 2.5 lakhs, has it got, is the benefit available to you beyond this cut-off period? The answer is no. So therefore, it has to be buried. You don't worry about capital and revenue. That is the simple logic that you have to use when you prepare a statement of P&L account. Now there are rules for P&L account. Now, the point I'm trying to say is, one very important point is every expenditure or income has to be routed through the P&L account or the statement of P&L. You cannot directly take it to the reserves just to hoodwink the income tax and things like that. That's a very important point. Other than that, this point is okay. This is where I think in the morning, Ullas Kamar talked about 10 commandments. I want my good friend SS Nayak, who has done a great job. In every Sunday, he comes out with a television program called Business Tonic. I think he has completed nearly 250 programs, 250 Sundays on Business Tonic. And I was called to be the keynote speaker for the 100th episode. And then I put up this slide, 10 commandments for business. So my topic today is financial non-compliances in financial statements. So I will list out the 10 popular non-compliances which is found out in the financial statement of an MSME. Item number 1. Clubbing accounting policies and disclosure requirements with respect to various accounting standards and statutory requirements. There is an accounting policy which has to be disclosed, and there are certain disclosure requirements. You cannot marry the two and put it in under one particular clause. You will have to keep it aside, keep it separate. You can have an A and B, or you can have all your accounting policies in one and disclosures in number 2. But you cannot in one point have both the things. And reference to wrong framework of accounting standards. When you are referring to, when you are doing the audit of a non-corporate entity, you have to talk about accounting standards of ICEI. When you are talking about accounting standards for a company, you have to refer to accounting standards of companies accounting standard rules 2021. And that is the specific requirement. And some of them still use the word read with Rule 7 of Accounting Standard Rules 2014. If they are doing that, that is also considered to be a technical mistake. Inventory cost formula not mentioned. What we have seen is they give the disclosure as inventories having valued at cost or net realizable value. Cost, I think this is a very interesting difference. Should it be lower of cost and the net realizable value? I don't know whether I told you. Cost and net realizable value, or cost or net realizable value. Think. The word should be and, right? Whereas when it comes to ICDS, they use the word cost or net realizable value, whichever is lower. Now, what has been found out, Financial Reporting Review Board says if you use the word or, I will punish. And Taxation Audit Quality Review Board says if I use the word and, I will punish you. So point is, whatever has been told in that particular the requirement of ICDS uses the word or, and accounting standard uses the word and, so you have to follow the respective words. You cannot change the words. Next, gross value and accumulated depreciation. When normally for companies we give, for non-corporates we don't give, but there is a requirement under accounting standard 10 to give the gross value, because normally we follow income tax depreciation schedule for non-corporates. There is a question of block of asset concept, but that is not acceptable for accounting standard 10. And also every year item, the previous year comparative has to be given for every figure. Normally we give the totals previous year, but what is required is for additions, deletions. Now for every item you have to give a previous year figure. Not using the standard words. Not using the standard words. Revati madam, what is the opposite of permanent? Opposite of permanent, think temporary, right? The opposite of permanent for the purpose of accounting standard 22 is timing. Permanent differences and timing differences. So to flip the question, what is the opposite of Bharat? What is the opposite of temporary? What is the opposite of temporary? Permanent, right? Accounting standard 13 uses the word, the opposite of temporary is other than temporary. Please understand, there is a temporary, there is an other than temporary, and there is a permanent. Now, where they use this particular thing, Babuji, is when we talk about you must account for reduction in the value of investments, long-term investments, if there is a reduction for reasons other than temporary. Suppose I have invested 100 rupees per share and it has now come down to 70 and it is staying at 70 for the last 3-4 years. He has to provide for the 30 rupees impairment. If he does not provide for this impairment, then accounting standard 13 says it is wrong. If he had used the word permanent, please look at this. If the word used there is permanent, maybe the other side will always argue, permanent तो कम नहीं हुआ ना? क्या कहते हैं? Permanent कब होगा? जब हम सेल करेंगे तो तब permanent diminishing value हो जाएगा. So very purposefully they have retained those words, and you cannot use your commonsensical words in when you are disclosing the accounting policy. You cannot take it casually. Dues to MSEs, suppliers, not furnished for non-corporates. Now what is the disclosure I am talking of? This disclosure, do you remember giving it in companies? This disclosure, we give it in the companies. We are supposed to give it in the companies. I'm sure most of you are giving it. If you don't give, please understand, this requirement of disclosure of MSCs is not coming out of Schedule 3. It is coming out of the requirement of MSMD Act, and MSMD Act mandates every buyer now has to show this particular requirement, which means also to the non-corporates. In the non-corporate, you have to show this. Balances shown under sundry debtors and creditors are subject to reconciliations and confirmations. You cannot give a statement like that in the notes. At most, this has to be a matter of disclaimer in the audit report, if it is a subject matter of reconciliation and confirmations. Similarly, inventories and related party disclosures as certified by the management. If that is so, if it is everything is certified by the management, what are you doing? When as an auditor, you have to certify everything. You cannot go by the certificate of the management. At most, we can understand that how do I know how many brothers he has, how many subsidiaries he has, or how many related parties he has. To that extent, I should take a confirmation and keep that as an audit working paper, management representation letter, a confirmation letter, but I cannot blindly believe only the certificate of the management without me as an auditor doing the due diligence. Now, accounting standard 15, compliances with respect to provisions and disclosures not made. This is a very common non-compliance I have seen is with respect to accounting standard 15, gratuity not being properly provided for. Every company, only relaxation is to non-corporate entities. I've already given it in my presentation, which is there in the souvenir, and I'm not getting into the details. There are certain relaxations available to non-corporates. Please take that, otherwise you will have to provide for accounting standard 15. One of the important points to be noted is comparatives when it comes to defined benefit obligation. When we do the comparative figure, accounting standard 15, para 120 bracket N, whenever reports come to us for non-compliances, this is definite in every company. Now, over a period of 4-5 years, people have improved, but you can go and check up. The comparatives for defined benefit obligation has to be given not for 1 year, but for the last 4 years. Otherwise, it is considered as a non-compliance. Offsetting rule not complied with. Now, offsetting rules. How many of us are still keeping advance tax on the left side and advance tax on the asset side and provision for tax on the left side? Now, if you keep that, it is actually a non-compliance. You don't have to wait for the income tax order to come and net it off. Today, it is based on self-assessment. On the accounting standard 22 says current taxes, advance tax and provisions, advance tax and TDS has to be netted off. Net tax has to be shown. Similarly, for deferred tax asset and deferred tax liability, you will have to net it off. But the only place where you don't net off DTA and DTL, if the DTA is in US and DTL is in India. So if they are in different jurisdictions, you don't net it off. But where the net off offsetting rule is misused is some sundry creditor with some sundry debtor. You cannot knock it off. If it is the same party, then only then you can offset it. So there are very specific rules of offsetting which need to be complied. Now, having given the 10 commandments or 10 commandments of non-compliance in IFRS, now let's talk about what are the 10 areas of noting in the financial statements. The 10 areas of noting: disclose only significant accounting policies. You don't have to give out all the accounting policies that you have. If that particular element is not visible in the financial statements, you shall not give that particular disclosure. However, the point is, if it is not material and significant, the accounting policy with respect to that aspect need not be given. Having said that, the exception to this rule is inventory, revenue recognition and borrowing cost policies shall be disclosed, whether or not they are material. But the point to be noted is, if you don't have a borrowing, then the disclosure with respect to borrowing cost itself will not be given. But if you have a borrowing which may not be significant, even then you may have to give. That is the difference between the two. Reserves and surplus. This is a very important point to be noted. Please understand, reserves and surplus come as Panara sir, I think we have discussed this. Reserves and surplus are not synonyms. They are antonyms. And that means they are different. Reserves and surplus. What we have seen, some of the mistakes that people commit is reserves and surplus. Under that, opening balance 100 crores and current year profit 20 crores, they add to that and it becomes 120 crores. Please understand, once you do this, tomorrow you want to give out any dividends out of this 120 crores, you don't know what portion is out of reserves and what portion is out of the P&L account credit balance. These are two different things. You can, please understand, you can declare dividends out of the profits of the current year and out of the accumulated profits of the previous year. without complying with the declaration of dividends out of reserves. There is a rule for declaration of dividends which have been transferred to the reserves. For doing that, you have to follow the rules. There are certain limits up to which you can declare. But out of the accumulated profits, you can declare any amount. And if that accumulated profit has got merged with reserves, then God save you. So please consider reserves and surplus as two different aspects. Not to give excessive information in the financial statements. This is normally a mistake which is committed by most of the non-corporates and certain corporates. Giving the bank account numbers, giving the name of debtors and creditors in the financial statements. While that is there in the books of accounts, at most it can be in the groupings, but in the financial statements itself, which is actually the balance sheet, profit and loss account and the schedules, it need not be there. So you can give all the names, account numbers separately. If you give that, it will not be a mistake, but it is not required. Previous year figures for each item is required, which I have already told, including depreciation. Interest on income tax, interestingly, interest on income tax, section 234A, B, C, where do you group it in the financial statement? Normally, because it is paid to income tax department, we put it under income tax. Correct? Normally, we put it under income tax. What is required under the guidance note is you are supposed to put it under borrowing cost. You have borrowed that money. It's a finance cost. 234A, B, C, interest. My office keeps telling sir, you have to show there and then resolve that in the P&L account. You have to do that. Whatever has to be done, has to be done. You cannot, for the sake of convenience, put it under a different heading. Ensure all notes are in same. This is a suggestion that the notes which we give, disclosure of inventory, breakup of inventory, whatever numbers we are trying to give, it's better to give it in the Excel document itself rather than in the separate Word file. Payment to auditors, breakup. When there is a requirement of giving the breakup of payment to auditors means section 139 says very clearly, auditors means statutory auditors. If you are paying anything to the internal auditors, cost auditors, you cannot put that under the payment to auditors. Both here nil. If the items are nil in both areas, that line itself will be deleted. Debtors considered doubtful, ensure to make provisions. You cannot say debtors secured, unsecured, good and doubtful. I think that's the breakup we have to give. The moment you say debtors doubtful, you cannot stop there. There is a requirement for you. The moment you put under doubtful, you will have to give provision for doubtful debts. So that's the point to be noted. And the last, never use notes on accounts. Never use notes on accounts for disguised qualifications. You cannot give notes and accounts cannot act as a semblance of your audit report. Please understand, notes and accounts is financial statements, including the notes and accounts, is authored by the management, and the author of the audit report is the auditor. So he cannot put the words vice versa. We cannot use each other's words. I wish I could cover 10 areas of noting in income tax, but that's for the 56th conference. 56th conference, Manara sir, you invited me for the 55th conference so nicely. Sir, I am 55 years. That's why I asked you. So they have given my age there. I don't know, because he was talking about yesterday, the regional council, SIRC, has completed 70 years. But the conferences probably are 15 years later. Or some years that they did not have. But in any case, I was fortunate to have the 55th year here, being my 55 years of being on this beautiful island. A couple of points quickly. I know my time's up is what they're saying, but I said I'll go till 125. Shall I? Another 10 minutes. Surely, 125. Okay, department empowered to get inventory value. All of us know 142(2)A, special audit, could be completed, could be done so far by only a chartered accountant. Now, for the limited purpose of inventory valuations, Income Tax Department has empowered the cost accountants to do good job when it comes to inventory valuation, but some of them probably consider inventory as a balancing figure. I don't want to say, maybe the companies do that, and the auditor, if he is blind to that, it will be very, very scary. Inventories have to be properly measured, and in case this special audit is done, the cost accountant is supposed to give the report in form 6D, which has come out recently, and this is applicable for all assessments done. My good friend Naveen Kariwal is here. For all assessments, Naveen ji, 1/4/2023 से वो पहले का भी हो सकता है, वो 6D में he prepares a special audit which is actually preparing the cost sheet and working out how the inventories are valued. So we have to do the inventory valuation on a very meticulous basis. That is the moral of the story. So this is the accounting standards full. Small company, I told you what are the relaxations. I will skip this. The definitions, the relaxations, deficiencies observed by the Financial Reporting Review Board of ICI. As I told you earlier, the maximum deficiency is in cash flow statement. The reason being, we don't give that much of importance to cash flow statement, thinking that nobody will see that. Accounting standard 18, lot of non-compliances. So please ensure that accounting standard 18 has to be properly disclosed. Now, can a chartered accountant sign projected balance sheet? Can a chartered accountant sign the audit report? I mean, it's the project report. Of course, audit report he has to sign. Can a chartered accountant sign a prospective financial statements? Can a chartered accountant sign a provisional financial statement? The answer is a definite yes. But with a rider. He has to comply with the standards. The standard on assurance engagement 3400 is applicable when you are preparing a the company prepares the projected financial statements and comes to you and gives you the financial statement and asks you to sign. You cannot just put a seal and signature on the project report. Please understand, every signature of a chartered accountant now requires a loading. I have become so cautious, Prasanna Ravu, that when I am signing with the check leaf also today, I am asking them whether executing is taken. That is the amount of the seriousness that has got into when it has come for UDIN. So point I am saying is, you can do it, you have to give a proper format and follow this. This is the wordings are there from the standards. I will not talk about that. Similarly, for provisional financial statements, I have to comply with standards on related services 4410. Whether I can certify ITR of an individual. A lot of chartered accountants, they come saying that this is a certified copy from what has been filed with the Income Tax Department. Please put your signature and say this is the document which has been filed with the Income Tax Department. The answer is this is not sufficient. Our institute has told very clearly that a chartered accountant is not a notary. Whatever he has done, whatever he signs should be either in the form of a report or in the form of a certificate for which he has to take the UDIN. Sri Priyaji also talked about mandatory review, peer review. All that I can tell you before I sign off is that the tagline is very important. My client is not my boss, and I as an auditor am not the final authority in audit. Okay? So if you remember this particular slogan, my client is not my boss. Never be under the intimidation threat, what we talk about. If he is too big to dictate terms to you, you better be his employee, and there is no guarantee that as an employee the code of conduct will not apply. While in services also it will apply, but maybe you will not be under the radar of NAFRA and so many other places. But certainly not as an auditor. If you have some big client who is dictating terms to you, wrong. So, and auditor is not the final authority. You understand what I am saying. Tips to CAs, I think you have heard enough, so I will skip this. The signature of a chartered accountant is more important than the signature of the Prime Minister. I think this calls for a applause. This is told by none other than our favorite Prime Minister. I did not applaud because I know the amount of the message that has actually come out from this. The signature of the chartered accountant is more important than the signature of the Prime Minister means if something goes wrong, I will send Hamas to your house. And that is what it means. So that is the message that he is giving. So please, what does it mean? Should we CAs be happy about it? Maybe happy and sad at the same time. Very paradoxical statement. I always wind up saying CAs need to be. I have my friends from Hyderabad. There was a chairman during the COVID period called Pankaj Trivedi. And I always used to tell Trivedi and Devi Telsamiko, one who has specialized in 3 Vedas. Chaturvedi ante all 4 Vedas. Dvivedi ante 2 Vedas. Now for a chartered accountant, he has to be a 3-Vedi. A 3-Vedi has specializing in all these 3 Vedas. For me, the Vedas are accounting standards, standards on audit, and code of ethics. And if you are a company, when you are doing the company audit, you cannot be a 3-Vedi, you have to be a Chaturvedi. And Chaturvedi means the Chaturveda is actually the Companies Act itself. I say off by stating one very important thing. The gods cannot be present everywhere. Therefore, he created mothers. Revati madam, you came with your son so nice. He created mothers. Stakeholders cannot be everywhere. Gita ji. Therefore, he created CA Gita, CA Panaraj, all chartered accountants. While this could be a very good thing to know, it is a great responsibility. Being a mother is not simple. Being an auditor is also equally not simple. And chartered accountants, Prasanna Kumar sir, are considered to be the alphabet of trust. Right? It's the alphabet of trust. And they are supposed to be men of integrity. So I leave a thought with you. What do we mean by integrity? What is meant by integrity? I think Manara Jaina sir, you can tell this better. What should be integrated? What should be integrated? My dear friends, let me tell you, what is integrity? Is the integrity between what you say and what you do. They should be integrated. That is what is Satyam Vada, Dharmam Chara. So do what is, say what is true and do what is right. This is the reason, this is exactly the reason why all the chartered accountants are called. For a long time I did not understand as a student, why are we called practicing chartered accountants? If we are practicing chartered accountants, Napat sir, hats off to you. I owe a lot of gratitude and obligation to you, you know why. Having said that, let me tell you, chartered accountants are called practicing chartered accountants. If I am only practicing every day, when will I become a perfect chartered accountant? When will I become a perfect chartered accountant? The reason there is, it is not practice makes a man perfect. That is not the chartered accountant practice that we are talking about. Practice what you preach. When your integrity of what you talk and what you do matches, you are supposed to be a practicing chartered accountant. So I wish all the practicing chartered accountants a great audit month.